Welcome back, Fox Business Alert. January retail sales are out in line with estimates. Let's get to Christina Partsinevelos with the numbers. Christina.
We got the pulse of the economy right here, and it comes in line with expectations. Retail sales at 0.3%. If you would take out the auto sectors, that would be considered core retail, also 0.3%, which falls directly in line with what analysts and experts on Wall Street were expecting. This is for the month of January. We're also seeing a slight revision for the month of December downwards, but overall in line. And there's two notes, Maria, that I read just before going live, Nomura, that highlighted there were warmer temperatures in January that could have fueled that, and JP Morgan saying consumer sentiment in January was also very strong, hence these numbers that fell in line with expectations. Back to you.
All right, thank you so much, Christina. We got markets still up this morning. Let's get some reaction on the retail sales number. Scott.
Yeah, it looks pretty good. I mean, what's funny about a lot of the econ data that's out there, besides being strong, Maria, a lot of the data is coming in right down the middle of the fairway. And so what's nice about that, I believe, is that's keeping the Fed on track to possibly ease interest rates later this year. But it shows that the Fed has done the right thing in those 3 rate cuts last year. And the market likes the Fed being back in the game here and doing what they were trying to do all along, which was keep the economy going.
Yeah, we'll see what happens now with these new worries about coronavirus in terms of the retail story. Let's bring into the conversation Anderson Capital Management's Peter Anderson this morning. Peter, it's good to see you.
Thanks.
We want to get your take in terms of connecting the dots, investing versus the economic backdrop. Your reaction to the retail sales numbers.
Love that number. You know, we so badly need consistency right now in a world that is very, very inconsistent. Anytime you can get it right down the fairway, as he said, I think that's perfect. 3.3% is right in line. I'm a little bit concerned about the revision from last month, but we'll take it as it is.
The story for this expansion, and particularly in the last couple of years, has been the consumer remains strong. Is that a reflection in these numbers today?
Absolutely. I mean, the consumer drives this market. And if the consumer gets spooked at all by anything like the coronavirus, then we really, really have to start to worry because, as you know, they are the main engine of our economic growth.
Are we going to need more stimulus later in the year, do you think, because of the bottlenecks that we're going to see in the supply chain hitting earnings? And I wonder if that's going to trigger the Federal Reserve to maybe cut rates, even though they were on hold. Or how about fiscal stimulus by this administration? The president is working on tax cuts 2.0. And I'm speaking tonight to Larry Kudlow on Marie Bartiromo's Wall Street program. When I spoke with him earlier, I asked him about the timeline for this tax cut 2.0 plan. Watch this. Are you working on another tax cut plan right now, Larry?
Yes, we are. Tax Cuts 2.0. In a meeting in the Oval, I guess 2 days ago, he looked at me and he said, let's get it out by September. We'd love to have a 10% middle-class tax cut, and we would love to strengthen and make permanent some of the other tax cuts. My great friend, OMB Director Russell Vought, has put a $1.4 trillion plug to make tax cuts permanent, and we'll probably use that to craft our package. It'll come out sometime in September.
Right before the election, Peter, what's your take? What kind of an impact might that have?
I love Mr. Kudlow because he's so optimistic and positive, and I think we need that. Last year was a fantastic year to continue that. You know, we have a lot of naysayers saying, can 2019 be continued into 2020? And I think it can. And as long as we have the thought that there is a possibility that there will be a cut or the Fed will support us, I think that's a fantastic support.
But isn't anyone in Washington, aren't their hands tied given the $1 trillion deficits that we're running now?
Well, perhaps.
Because it's not a problem until it is a problem.
That's right, and it isn't a problem yet. And the deficit, you know, is something that's an abstraction. I think that it's very, very hard for consumers to get their arms around, frankly, what the deficit is and how it will be paid back.
No, people know math, and people know the horrible situation you can get in when you take on too much debt, and then you don't have basically the income to pay it off. People understand that. People understand very clearly that our service on just our interest, servicing our debt is going to swamp what we spend on our military every year.
But the other math that people know are their own finances, right? So the fact that American families, the typical American family got a $2,000 tax cut from the 2017 Tax Reform Act means that they'll miss that if that goes away, and that expires in 2025.
And their wages are going up.
Right,
The wages.
exactly.
The wages are going up.
I was
completely.
talking more about additional spending.
Sure. No, and
at least
that
upfront
point, I totally
spending.
agree with you.
But everybody's trying to lever up, though, too. I mean, if you can go out and, get a loan from the bank or get a mortgage, refi, whatever, I mean, people are doing it. One thing, Peter, that you brought up that I liked was consumer confidence, which is at all-time record highs. The one thing that's been kind of a weird bugaboo, though, is business confidence has been kind of lagging lately. What's going on there? Is that China trade deal stuff? Is it election? What is it?
And now we have some certainties after the trade story, so
You
it
figure,
should be picking
USMCA.
up, right?
I think businesses are just so super they're very, very careful about extrapolating how the economy is going to go forward. And I think the China trade deal really spooked a lot of them. But you're right. I mean, I was surprised this past year that lagged. The consumer is really the leading optimist right now, which is a little bit unusual. Normally, it would be the other way around. So I think companies will start finally hiring more people, but they've been ultra cautious, and frankly, even though they have been ultra cautious, they've done very well. So there's not much of an impetus for them to actually pick up.
That's actually a really interesting point. They've done very, very well, and they have not been very confident. Isn't that so interesting? Like record earnings reports in business, S&P 500 companies, and business confidence is low.
Right.
Well, the spending, though, slowed down during the trade uncertainty. I mean, I know that you're not going to see a sharp slowdown in spending when it comes to technology, cloud business.
That's correct.
Et cetera.
Yep.
That stayed. But you did have some uncertainty around the trade issues. Does that go away?
Well, let's put it this way. If there is uncertainty and if they did hold back, can you imagine when the floodgates open?
Right.
So that's why I'm thinking 2020 is going to be another banner year, not a year of caution. But finally, the companies will catch on and say, hey, now it's time to open up the floodgates just a little bit more.
Except
on
it's an
expenditures.
Election year, yeah.
Yeah.
Yeah, that's what I was going to say. Because it's an election year.
Yeah.
Do you want to buy stocks in an election year?
I want to buy stocks this year because last year was a fantastic year, and this year, when all the naysayers are saying things are too expensive, you look at the PE of a lot of common stock companies, and they're still very, very attractive.
Yeah, okay. Peter, it's great to have you. Thank you so much. Peter Anderson, we will see you tonight on